Welcome to Markets Now. I'm Michelle Rook along with Bryan Doherty with Total Farm Marketing. Higher closes in everything on Friday. And Brian, let's start off talking about the grains because soybeans the leader with these hot, dry forecasts. Man, a strong weekly close. Can we keep going?
We sure can. Beans are a very volatile market, and the Bears had their kind of day in the sun a week ago. We got good rains moving across the Midwest, and we're pushing the crop right along. And a lot of farmers are feeling really comfortable with what those rains did. But then all of a sudden, if you're in an area that didn't get much rain, you're looking at very high temperatures, the highest temperatures for the season, and you're looking at lack of rain in the forecast. So the trade didn't take too long, picking up just over 45 cents on the week last week. That's a really good comeback. Corn made new lows for the year, bounced back and finished with 5 and 3/4
Wow.
cents gain. And wheat had a really good day Friday. Now wheat still finished the week lower, but wheat prices really imploded over the last several weeks. Had a really strong Friday, good fundamental value to the world market, so we're looking for exports to pick up. Farmers selling on corn and beans probably stays pretty stingy. If you're a bean farmer, you're probably already sold what you're going to sell. Same thing in corn. You're not likely to sell much down here.
So, soybeans, if the weather stays hot and dry, we closed above the 200-day moving average. As you pointed out, we had a higher weekly close for the first time in a while. So, where do we project to after this then?
Yeah, I think you run right back to $14 in that area there. There's a point on the chart here that if we look at a gap, that gap is up in the 1378 area. Look for the market maybe for us to get there. But if we start to build that momentum, you're going to look at the market pushing right up to $14 where it was when it posted its key reversal at the end of July. So got a big sell signal at the top, corrected downward, and now it's starting to bounce back. Made a nice 50% correction on the chart. Good move here this week. If the weather is less than ideal, I think the end users cover themselves pretty aggressively. There's more to it than just our weather. China has been buying beans as of late. We're seeing movement around the world. Brazil probably going to be exhausted selling their beans or their exportable beans sometime into this late fall window when our beans are typically available. So we got a few things of momentum going. I'm sounding real bullish. We've got a good crop coming, but I don't know if we've got a great crop coming. And the private tours and the farmer feedback will tell us a lot more after next week's weather.
Yeah. So does corn keep following soybeans or, are we trying to put in a little bit of risk premium there again because of maybe the hot, dry weather cutting a little bit of yield here as we go into the fill period?
Yeah, yes, beans can provide some support for corn, but I wouldn't bet on it. Here's the problem. Right now, you've got a 2.2 billion bushel carryout for corn, more than
Right.
adequate. Soybeans, you could argue 250 million. Remember, we lost 4 million acres of soybeans. And so every bushel begins to count. And in particular, if we go back to USDA reports where they cut 100 million out of exports, brought in 25 million, I'm talking when they, the USDA. So you really had to see some numbers come out to say, how do you take 4 million acres out of production and raise carryout 100 million? Well, that's how you do it. But ultimately, it depends on the yield. 52 bushels was the forecast then. Now we're, maybe 51-ish in that area. We'll see what the weather does next week. If the market feels it's closer to 50 or maybe under 50 due to hot, dry, well, then we probably go to 14 or higher. I don't know if it pulls corn to any appreciable level, let's say above 550 or something like that. That seems a bit of a stretch with the corn crop that for many, I'm going to say is getting close to the home stretch.
Well, I was going to say, Brian, we got to get above $5 and close above that level first, don't we?
Right. But when we talk about $14 beans, we're talking about beans getting back to their highest price for the year. And
Sure.
corn would be nowhere close to its highest price for the year. So yeah, corn first has a hurdle to get through five, then get to 520 and 530, 535. Um, there's a really good looking corn crop in a lot of the country, very timely rains, great genetics, great farming practices, great farmers. And it looks like they're going to this year really kind of pull a rabbit out of the hat due to timely rains. But it's a good looking crop at this point. I don't know if it's great, but it's a good looking crop. And private estimates still coming out in that 175 to 177 yield. Boy, that's pretty tremendous considering 13% of the crop is still rated poor to very poor. That's a testament to the increase in production capability through the various means I said, mainly genetics, though.
Yeah, we'll see if we get that confirmed in the tour next week because we'll have a lot of eyes on that. So the wheat market helped out corn, obviously, by just not going down. And so wheat, actually, you told me we put a double bottom in there this week, right?
Yeah, you got to go back to when prices bottomed in May, but you got a nice double bottom on charts. We saw a steep rally, and part of that was war premium, dry weather concerns, and then the market flipped over there. Now went back down and in from midsummer and really crashed kind of hard, but really nice, impressive long-term looking charts, double bottom. Wheat's been a real enigma. There's every reason to be bullish wheat, then it seems to tip over. And the war premium is dismissed, and weather is dismissed. Yields are pretty good for soft red winter wheat, but we still didn't have a very banner hard red winter wheat crop. Spring wheat, yeah, it's mixed. It's good in areas, not in other areas. Canadian prairies, maybe some help with rain in the week ahead, but you kind of step back and look at the world. Exportable countries are still at 15-year low levels on exportable wheat. That tells you the wheat is a pretty good value to the world. What's been holding it back, and part of the downturn here recently, was the dollar has been creeping higher, and China's economy. Every week that goes by, we seem to get more and more confirmation or reports that um, the world should be concerned with not only for agriculture but for everything related to China. Their economy's in pretty rough shape right now.
Yeah. No doubt. So, there was some talk of geopolitical concerns here today, maybe helping the wheat market out. But we also had news that India is actually going to be buying wheat instead of being an exporter. They're going to be an importer. Did that have a role to play?
It has a huge role to play. There's talk of up to 9 million metric tons, and just use round numbers. If 40 million bushels in a ton, so 9 be 36 million. It's not quite that high, but say plus 300 million bushels in that range there. That is a lot of wheat. So let me do the math again. Nine times is over 300. So that is a lot of bushels that are committed in the world market, albeit from Russia. But remember, the wheat's a world crop. So there's different pools that the world can source wheat out of. And it really doesn't, in the big picture, maybe matter so much where it comes from. It's just that it's being used and consumed. And the big picture message is there's a shortfall in India. That sends a signal to the world market. We're hopeful that the market's double bottomed and is reaching for its low here or has already seen it.
All right. But are we going to get any business out of it? That's the big question.
Yeah, and that might be a bigger picture question too, because I think a lot of it is the malaise of the world economics and where hedge fund money in does it want to buy into commodities with a rising
Yeah.
dollar and a declining Chinese economy. The perception is that there's not a real rush to have to buy anything and that end users are only buying what they need because that's all they can afford.
Cattle market to the plus side here today, reversing a lower opening. But you and I are doing this before the cattle on feed report comes out. So I guess we'll talk about the fact that really the market was down most of the week here. And it was kind of because of the sloppy cash trade that we had, wasn't it?
It is. We're quickly getting beyond the summer demand, summer grilling season. Uh, Prices are high. Um, Economically, I'm just really concerned that the market can't hold up. In fact, the bullish or the bearish key reversals that were posted now over a month ago still hold at the top of the market here. So to me, the market, it's got a lot of back and forth and shows a little bit sign of life, but it's not showing me the momentum to carry it higher at this point. I'm just really cautious on the live market. It's kind of been this nice stair step up. And, the old saying is stairs up and elevator shaft down. I'm not predicting that, but what I am predicting is that the consumer may be getting really tight. Bloomberg had a report this week that consumers have not only chewed up all of the stimulus money in savings, but now they're at and getting close to either high or record high credit card debt. That's
Oh.
not a good recipe to keep cattle prices moving higher. Cattle on feed report, you're right. We're doing this before, but since it's a month to month report, I can't imagine we're going to have some shocking number that that would take away from what we've been seeing for a long time. The herd is contracting, the beef herd is low. The question is, when does the cow-calf operator really hold back and breed this out? So far, with corn prices high into midsummer, I don't think they've done that. Maybe they will this fall.
Yeah. So milk market had a pretty good day on the class 3 fluid prices, and we have had a pretty good recovery above the $18 mark now. Is this the start of something?
Like to think so. Global dairy trade did not have good numbers this week, and the market shrugged it right off. You've got firmer cheese prices at the end of the week here. You've got blocks and barrels in the $19 to $20 equivalent to milk. And then you've got heat coming into the hottest temperatures of the season, and it's coming into the Midwest, and it's coming into key milk production regions. And that usually has some impact. We've got a milk production report out. And that will likely show again some contraction to the herd. I'll remind you the June or the July report reflecting numbers through June showed 20,000 head less than a year ago at the same time. So we've seen successive reports that show that we're not seeing wholesale liquidation of the herd, but we're seeing a leveling off or decrease in cow numbers. We think that continues here into the edge of summer beyond. The deferred futures just haven't given the incentive to grow the herd. With all that being said, um, the milk market sure looks like it may have seen its low. The September contract broke out into a wedge formation on charts, and the back months, the fourth quarter, are now averaging over 18. Attractive, but probably a little more to go there. So I'd like to think that the milk market has a little bit upbeat tone, especially going back to school, more demand for milk. And then end users long term really starting to think about Christmas, Super Bowl, winter demand, pizza demand
Sure.
as we head toward the end of summer.
All right. Thanks for joining us, Bryan Doherty, Total Farm Marketing. That's Markets Now.